Welcome to TradeTheMBI.com. This is John. This report is for December 28th, and we're getting close to the end of the year. We'll be changing our password. Well, it's going to be Friday, so I'll be doing that at some point during Friday. So be looking for the new password email. And if you've been a trial member, look to continue trading with us through the new year, because we've had a pretty decent run of things overall, and didn't quite get to the 100% returns that we had hoped for from our overall portfolio, but there's no way to predict those things in advance. But we did know that we were going to outshine as far as the futures went, and even from our overall swing trades, we did just fine. And we kept it very conservative in the sense that we never really put ourselves in tremendous exposure. But very bizarre readings right here. I mean, this is unusual. 3 nearly in a row. Green dot hawks. It's kind of unusual, and particularly at this particular point, and it's not matching in the futures. So we're starting to get a little bit of a dichotomy between the cash index, between what the futures have been going through, and it presents some problems, but it's not insurmountable. You do see interesting setup here where in your expanded ratio histogram pop back up, and this time just the opposite of what we were looking at over here with the orange above. This time you have the yellow above. That's not as bullish as we would hope. We continue to see a cascade lower from our power momentum from the cash index, but yet from the futures we've got a bit more of a positive setup. So problematic to some degree, but we'll still be able to trade it effectively. Just very interesting, though, that we had this decline, and it fit within what we were looking at from the futures chart, because we had this long tail that came down when we had that congressional adjournment, and prices plummeted in futures by quite a significant amount, and then came back up. But because we had dipped below the red line on the daily and the futures, we were expecting that we had the possibility of that retrace. So we're very cautious about our entry, and we used puts in order to do that. So it became very effective, and you can see here, even blew past the bottom side of the Bollinger Band on this, and we did go negative from up-down power in our continuous. But you've also reached pretty decent extreme. So the first pop back up is also going to be positive. Yeah, we also have a GAM. That's positive. So you've got some confluence of positives within this overall bizarre setup. It's weird. There's no other way to describe it, but we can still take from it and make our trades, because we can just go deeper into our indicators to get some more information out of it. This was helpful, seeing that our price oscillator had gone to that extreme pivot, and we knew that we were going to be in some downside pressure because MACD buyers turned into MACD sellers. Huge supply. Now that supply was completely sucked up. That's crazy. And you know that some of them that turned around and shorted, not just sold, had that supply eaten up. And gosh, you got to think that's bullish when you see that kind of absorption of major technical kind of sellers, because it's a popular indicator that people will use and they'll get out of it. And I wouldn't be surprised to see a strong counter rally to that, because just as we go through the process of talking about how when MACD buyers are buying, and we look to extreme situations to sell, they're not always wrong. In this particular case, the buy signal came in, after we had the big move. We were already in on it because, we had our earlier signals, but it's pretty much stayed with it. They had their little bit of upside down with the lower histogram, and we caught the pop. But in this particular case, they've gone both into the negative as well as, from a distribution and selling. So they won't be back in the setup. And if we get back up to the highs and they just get in, gosh, that'll be an even more positive. So what had we done? Well, we had sold 60 puts. And I said to you, look, if you get down to where the puts were, well, let's first take a look at it. Why don't we do that? Let's pop it up on the website. So we sold 60s. We got 75 cents for them. We wanted to go for. Now, if you wanted to, you could turn around and buy 400 shares at the 59.25. Well, even better than that, I would want you to be, trailing that entry lower because, like I said before, if we get down to that point, yeah, you want to be a buyer because you're going to be reaching an oversold at just the point where you want to enter. So, yeah, if you were careful about it, you could have, well, and if you had the indicators, you definitely would have been down here when I was touting going along the ES. On stock twits and that. Did get a bit overbought, but you turn green trend, so that can happen. So modest little pullback before a secondary run would not be out of the question. If we do get put the shares, we're fine. If we get back over 60, it's okay. We'll just take the premium that we collected, end our year with that one, and look for another setup. If you do have the shares, if you do get back to your city, 60 value, I would want to set a stop. I mean, that's 75 cents. Decent move for the overall. Now, you can see that I have the ABM starting right here, and I can let you know what that number is. 58.52. So from where I had listed an entry somewhere around the 58.59 range after the dip below, ABM's pretty much almost at it, and considerably higher now, though. So always worth pointing out. USO. Let's take a look at USO. I don't think I have one of those up. So just click it from the website. 2 locations you can do that from. And we had sold, 32 calls for 60 cents. And if we get called out of those for the 300 shares, then fine. That just will reduce our overall cost basis down to around the 28. We're selling at 32. That's what you like to do. Buy medium low and sell at a higher price. So that's fine. It actually came down to an equal value right there at the 32.77. So it's kind of overbought in this setup. So we'll look for further retrace before we would jump back in. So we'll probably do that next year. So no issues with that one. GLD still working its way back up to this upside target after it's got some work to do getting improvement from this negative 26 shakeout. But it was nice that you had the yellow line. And, we don't talk about some of these nuances all that often, but the yellow line dipping below this blue, I look for that as an oversold, and then you look for your first move. So right here, you had it dip below, it stayed below, and then finally came back up. That was a signal. Dipped down below again, but this time the yellow never dropped below, and you had an immediate move back on the shakeout to the upside. So, watching that histogram, you can trade that, in conjunction with your downtrend models. Variety of different ways to utilize the indicators in conjunction with each other, particularly if you want to stay in with a nice run. CLF has been an excellent run, and from our overall CLF, let's go back to the USO one. We'll just scroll back. CLF. So we have our 300 shares. We had sold 34 puts to get additional. And what we want to turn around and do is if we put those shares at that 34 range, not likely at this particular point, but should it happen, we want to turn around and sell 37 calls for next week. They're going for about 60 cents. And that would be even if we don't put the shares, we still have 300 shares. We want to do that. Why? Well, we're getting overbought into the setup, making our second run. So while it can still pop a little bit from here, we're good. We did excellent with it. So we'll take that and look to play it in the new year. No objection with that. X, we had sold 23 puts, moving lower. So 1 day left. Will we be staying above it? Probably. Which, from that standpoint, no big deal. That will leave us the shares. Then we'll probably want to turn around and we'll look at later in the week to either sell them and or decide if we're going to carry them over into the new year under our new portfolio. WLT. We were bullish on this new setup for WLT. I don't have that one up either. Oh my goodness, shame on me. That's futures. Let's go to this one. Yeah, we'll just click WLT. And here we go. We had sold 35s for $1.50. We sold 32.50s, and we own 300 shares at $34.50. So quite a bit of selling going on within this setup because we're looking for a bounce. If we get back above the 35 and we don't get put the shares, fine. If we do get put the shares, great. Let's turn around and wait for a bounce before we would go ahead and sell any calls into this, because I'm still looking for a pop, at least to cover one of these dot fractals from a buy standpoint. So keep that one in mind. I thought I'd show this one because we were just talking about that. I had a member request Coca-Cola here from a Dow 30 standpoint, and you can see how ugly that setup is within the shakeout, how it's moved well below the blue line here, and the histograms often will stay below the yellow line as well. And it's the first move back above, and particularly if you can be above your red line on the extreme, that would become your buy setup. So where you can trail something like this with the red trending like that, this lets you know that it's not quite resolved. But at minus 14, is that horrible? No. You're not getting a huge delta on Coca-Cola anyway. So, from a more stable stock, it's less, important to utilize this more complex kind of review. But on your more high beta ones, particularly like a CLF, that becomes very valuable to take a look at that, particularly with your up-down power, especially since this was the nice upswing that Coca-Cola should have been having within the power momentum, and you can see it's gone nowhere and held below the red line, and so it stayed consistently below that red line, even though you've had the cyan over the yellow down here on power mo. So that's going to have to reverse itself. I would typically look for a little bit more of a retrace, where you get a tiny little dead cat bounce, where we get the extreme histogram above the red line, and then that next dip. And this is kind of what we were talking about for Apple. In fact, I should put Apple up there. Let me do that, because it points to it, because we were looking for Apple to retest its daily that had dipped below the red line around that 505 range that had been very popular, and then at that point we were going to be looking to hopefully have a higher extreme histogram where you could then trade into it. And for some reason it's just not popping up yet. It's because it goes through. I have 5-minute, 15-minute, 78-minute, and all those charts want to pop up before the final daily does. So you can see here, from the Apple standpoint, retesting it, but again, dipping below the red line. So while it's matching same place and MBI, so that's actually a positive after just having had a very strange halibut signal. Unusual to have it down at this particular level, but at negative 35, I mean, that's just horrible as far as a strength goes. So again, this is where I was talking about, you want to play this for 5-10 minute charts. I think the 10-minute was absolutely spectacular. Because even before those red dots came in there, the 10-minute chart had given a series of buys that worked out beautifully today. And even though it was quite depressing to start with, it had the red dot short right back over here, and proceeded then to cascade lower. But, again, this is a perfect example of that red trend telling you that, okay, yeah, but you want to look for a discount. And finally got the discount. Then it took off and gave you an orange dot, and then boom, green trend. So, and again, we want to count this at least 5 bars after the flip from red trend to green trend before we worry about extreme overbought. So, always good to look at those different time frame kind of segments. Here we have the daily from the ES. Now, on the ES, I wanted us to buy. So we'd already been at 419. I said at 409 you would want to begin to trail lower. Well, we opened up above the 409 and then just immediately started cascading lower. So hopefully you trailed it lower and did even better than the 407. But I put the 407 there. Now, what I would like to do with this setup, and we'll change this one, I'll put it on there when I update. I want to go ahead and sell it at 1419, the same entry point we had here, and just collect that difference. We're not going to affect this target, but that will at least clear us from the additional 3 on a nice little bounce. So any little bounce should get us back up to that 1419, and we'll just go ahead and take an easy 8 to 10 points depending on where you got in, or a little bit more. So, and this points out, because some people ask me, well, why did you have to stop at 1385? Because we needed to get past this low setup right here. Let's zoom in on it a little bit. See this long wick, if I move my 35, that's what we were talking about, potentially seeing a retrace when we dip below the red line on it right here. Okay, and it happened right here on this spike that could potentially be a ratio, hawk short. We wanted to see that setup overall, and you can see now the cash index is back up over the plus 13, whereas this one's not. So I need a little more time to see how those resolve. I've got the yellow line below on my shakeout indicator, so I mean I could be close to a rather nice pop, but it can also continue its decline. So I'm going to play it a little more cautiously. We'll get out of the one setup. If we don't see get up to that 14.19, then yeah, I'm going to want you to move up a stop close to our entry point on that one and just leave the original 3, and we'll work through it. And that's just being dynamic and adaptive. And why? Well, if we go to what the MBI Opus was doing, again, remember, we didn't just jump right into it, even though the MBI Opus was given a buy signal from the Iron Hawk. It had that freak out from the Star Hawk. So kind of an odd confluence of events have kind of messed up the overall signals. But we were taking advantage of understanding some of these nuances within the indicators, looking for discount, number one, from the catfish signal. Okay, and both of them came through, and because the Iron Hawk up here ended up having a dip to the stop, it cashed out both of them. So it would close out both of those. Now, so let's look at what that does to the MBI Opus. It's going to ruin it, right? All right, well, that's the equity curve from that standpoint. But if we look at the performance report, all right, so it drops us down from 83.5 to 82%. Didn't really hurt the profit factor all that much. But the point being is that we don't get the stop out, because this is not the first time that we've done this where we've been even more attractive in our setups than the MBI Opus has given us. So, using our minds to even do better than an already fantastic setup. So, certainly could have just traded it mechanically, but this provided a little bit more potential for us to the upside, and we've done it before, so this is no shock. I did want to point out that we did a live event, and if you can't always make it to them, you can always go to www.livestream.com, TradeTheMBI, our channel. No, it doesn't look like this. In fact, I'll push play and you can see it. But it's like a TV station. It'll replay over and over. Yeah, you have to watch an ad like this thing down here, but pretty darn clear because it can give you HD quality. It was actually better than the Google Hangouts. So that one is there. You can also do it from our website. Let me just plop up one of these. I have it under the Trade the MBI, and it's under the live stream. And so this gives you, it also has the current stock twits feed going on it, so you can see what my most recent posts from there are. But you can chat with me. Had plenty of great questions and good opportunities for you to pick up little added insights. That people suggested doing a blog. May even have that, particularly for members with the indicators, because that it's an ongoing understanding of these indicators. And I always recommend starting with the simple stuff, the trend model, and you work your way through, and you start to it becomes clearer as you start looking at more and more charts. And it's like I tell people, I look at a chart and immediately I look for when the extreme histogram is up near 0, and I already know at that point I'm looking probably at an overbought, and then I can follow through with looking at the rest of the indicators, and you get a good idea doing it that way. So, always little tidbits. I know it's a lot of information to take in, but one step at a time. We're not going anywhere. I've been here for a long time. I'm going to be around an awful long time to come. So, as always, though, if you have questions, you can contact us from the webpage, send me an email, Twitter, Stock Twits, any of them. Just ask a question. Happy to answer. As always, though, trade well. Take care.